Alright guys, welcome back to the channel, and in today's video I want to talk about how I got this trade, and not just how I got the trade, I'll be telling you how or why experience is good as a trader. So welcome back to my channel on RSFX channel, and I'm a day trader of course, so I do take trades on the daily time frame, and yes, I do hold for some days and more if needed. So let me take you to my trading view where I did the analysis. So this is my trading view here, and this entry model is actually called the candle range theory entry model. Not just the entry model. How did I make the analysis? It's more of a top-down analysis. I started from the weekly time frame because I was actually looking for a very good point of interest that I can hold on to before taking this trade. So on the weekly time frame, this is what we have here. This is what we have here. Look at here. So if you know what a CRT entry model is when you have that price has taken out liquidity beyond or below the previous either day low or the week's low. Now, if you look at this price action here, you see that on the weekly time frame, this price is very bullish. We have a bullish market from this level. Let me show you. You can see we have a bullish price where we have this to be a break of structure, a break of structure. Sorry, break of structure. This other one is a break of structure where you have this liquidity sign. Now, look at what happened here and why I took this trade. This is what happened here. Look at this low. Price swept this low. Not just this low. I was expecting price to take out this low, but due to some forces, I don't know why, it did not take out this low. That's how the algorithm works. So just this low one's enough for me. Then if you should go to the daily time frame, because after a sweep of liquidity, you expect a retracement. And this is it here. After a sweep of liquidity, you're expecting a retracement, and this retracement is the one you want to trade. This very little retracement from this level to this level to any level within the range is the one you want to take part of. So if you go to the daily time frame, this is what I saw in the market. You see, price did not really take out this level. So price did not take out that level. It's more of an equal low, which is actually saving up liquidity for the next time. Now, if you zoom in on the daily time frame, this is a fair value gap here. So if you don't know what a fair value gap is, you can just go into my playlist there or my channel. You see it from this gap here to this level. You have a fair value gap, and a fair value gap you always want to is also known as an imbalance. And as a trader, you want to see price, fill up a fair value gap into at most 50% level. 50% level of the fair value gap. So even before now, I actually shared this signal to some of my friends. I shared it to them because they were in this funded next competition challenge for this month. So I kind of gave them the signal, but they were so skeptical. Let me actually chip in the video where I explained this whole trade entry for them. Now look at this trade now. Why I'm taking this trade? Look, this is a weekly time frame. You can see that market came back to this weekly low, and I was expecting this liquidity to be taken out from here, but price did not take it out. So if you go to 1 day, see that 1 day now, we are at the same line, almost like the same page here. Look at this is the low, that's the previous weekly low, and price did not take it out, which this candlestick is actually retracing. Now, if you look on the daily time frame, this market is a bearish market somehow, but generally is a bullish market. So you could be very careful. Now, going to the daily time frame, what do you have here? You have an imbalance. So what do you expect after an imbalance just like this? You expect a cover, a retracement. That is why you see my TP is right up this point here, because that's where price is going to get balanced at this level. Now, look at this daily time frame. Price dropped the previous day low from here. So it's more like a CRT entry model. So because price could not sweep the previous week low, which would have been a very sweet one, like a very nice one, but price could not sweep the previous week low, but it swept the previous day low. That's taking out liquidity from the previous day, this bullish candle, which is also good for me. So I want to retrace to it, but my second entry is going to be below this low, that's previous day's low. Yeah, this red one, because if price should come down to take out my stop loss, I'm expecting it to take out this week low, so as to reject to cover up this imbalance. Go down to 15-minute time. Okay, go down to 1 hour time frame. 1 hour time frame, you see already safe. Price is not giving healthy signs, but it's okay. You see that This FVG that price is supposed to come into. Price is supposed to come into this FVG before it start buying. I'm even expecting price to take out this inducement, this imaginary inducement also, because this is not a good strength for the retracement. But still, we are still retracing. Sure, you can never tell. The Australian dollar is Asian pair, so it might move during the Asian section. So that's just it. Check on the 15 minutes. Price actually has created a 15 market structure in the 15 minutes, and you know what that means in the 15 minutes. So if price should do anything for me by taking me out here, I will now wait around here to see how price is going to react from this liquidity. If the liquidity here will be enough to push price to that daily FVG, but if it's not enough, I'll also wait around here. Also, the weekly low. So you see that price take me out, come down to this weekly low and go up. Now, if you see this trade, now you think that I'm being greedy with my stop loss. No, it's just that I want to, be able to minimize risks and at the same time understand what I'm doing, because if I should retrace down with an impulsive move here, a very strong impulsive move, I might forget about the trade. That's just it. So whenever you see my stop loss so tight and everything, it's not because I'm trying to do any kind of stuff like that. It's just that you want to be sure about the dynamics of the market. You want to be sure that market is actually playing out with plan. So it's better to minimize your risks and wait for a second entry. So welcome back to the video. After everything, yeah, looking at this fair value gap, I was expecting price to come fill it up. Yes, to come fill up this fair value gap in order to, you know, have a complete market structure or price action. That's why I see my take profits is around this week. That's where we have a balanced price action. Yeah. So that is it here. Let me show you my entry on the 15 minutes here. On the 15 minutes here, I had a shift in market structure, and that was how I saw on the 1 hour how price ignored this fair value gap. Now I have too many experience of how price action do play out like this. There's a time I made a video here on my channel about you against the trading algorithm, and that video is something I explained something like this: how people do miss good setup due to the part of they are being skeptical about price action. So that video explained everything here, and if you have seen that video, you must have gotten more like a experience here. So due to the experience I have, I actually entered this market. Now, not just this, I traded a CRT entry model like 3 days ago that had the same kind of setup here. If I should show you, let me show you. That's GBP, well, that's CAD card. That CAD card, if you check on the weekly time frame, here in CAD card is very, very visible and it's very nice because everything I wanted came out well. CAD card, you can see that on the weekly time frame, this is weekly time frame. See that price swept this liquidity. I also have it on my playlist here. I talked about the CRT model. I to this on my playlist. See, for 2 weeks here. Let me show you something. Let me zoom in a little bit. So this is 2 weeks candle range here, where you have this to be week one. This one to be week one, sorry, where you have this to be week one and week two. So price swept liquidity below this low. That's you've taken liquidity below 2 weeks. That's about 10 days trading. Imagine taking liquidity below 10 days of trading action. You're going to have a lot of liquidity below here. So if you check on the daily time frame now, same trade entry model, same setup. It's just that this one was more complete than the one I'm on right now. See, it's still the CRT entry model, the candle range. You see, liquidity was swept here. Look at it. Then you check on the 15 minute, that's or 5 minutes. Let me show you 5 minutes. That's how I get my entry. In the 5 minute, look at what happened here. 5 minutes. Sometimes 5 minutes might be too noisy. You can still go as low as the 15 minutes if you still want to be very sure. Where is my trade? On the 5 minutes. Only 5 minutes, we swept liquidity below this low, and we had a shift in market structure here. The first retracement, I was not around as at this time. We had a break of structure here, and I was not still around as at this time. Now you check on the 30 minutes here. On the 30 minutes here, this is a very nice fair value gap here. But in this time around, price actually threatened me also in this trade. Now, like I said, one thing about trading is that just do what you know how to do and allow the price play out. And whenever I do have this tight stop loss, guys always feel like I'm actually doing it for more like a flex to me. It's not like a flex to me, it's just that I know what I'm doing and I know when I'm not supposed to be in a particular trade. Now look at here, price threatening me around here, and yeah, this is an imaginary inducement also. After the retracement into the fair value gap, an imaginary inducement. So I was expecting price to take out this inducement. That's why I heard this line. If price should take out this inducement, I look for a second entry around here, but it did not take out the inducement and it went. That is why you don't have to be skeptical, provided you've played your own role by analyzing and waiting for your confirmation. Then execute the trade. Execute the trade. So that's just it. And not just that, I had a nice target, guys. I said as far as you're taking a trade, you must have a good target and a good entry. And a good target is the liquidity. A good entry is that liquidity was swept below here and is actually trading to liquidity above here. This is an engineered liquidity also. So I exited the market around this level here. That was it. Yeah, that was how I took this trade. And due to the experience I have on this particular setup, I was able to take this other trade today. So one thing about trading is not just going away from the chart. Sometimes experience can just be a strategy, because a strategy is something that has repeated itself for a period of time and people have studied the pattern and everything. That's what is now being called a strategy. So whenever you have a constant, should I call it affair or a constant communication with the chart, you tend to understand the dynamics of market, and which might give you a complete information, a complete should I call it knowledge about price action. And when you have a complete knowledge about price action, you are now experienced. So whenever you see anything play out in the market, you are not too skeptical. You just have to do what you ought to do, then move on. So this is it here. On the 1 minute time frame, this particular trade, the 1 minute time frame, I'm thinking of exiting the market because I don't know what's happening. If we should break below this low, or should I call it this low now? If I have an impulsive move below this low, which is now a shift in market structure, I'll be exiting this market. Now look at it here. So there is no need to stay too long in the market. Why will I be exiting the market? I'll be exiting this market because already I'm at my 50% level in the fair value gap of the daily time frame here, which is around here. You can see this is the fair value, this is the daily imbalance. This is the daily imbalance, and we have already gotten from the 50% from this week to this level. This is my overall take profit, and from the 50% we expect to see rejection in price action. So if I should check on the 1 minute time frame and I have a shift in market structure, this is when I'll be having a shift in market structure. If price should break below here with an impulsive move, I will exit the market knowing fully well that we want to start the rejection from the daily time frame, and that will be all. That will be all for the trade, guys. So I will stay with this trade, hoping that we don't break here. So that's just it, hoping that we don't break this low. So this is more like a sweeping liquidity where you see how price actually traded below this low with weeks. So it's not a complete shift in market structure. For me, it's a sweeping liquidity. So I'm staying in the market, and that is it here. I'll be holding till I see a confirmation for bearish, then I exit the market. That is how you trade. You trade with experience, you trade with everything, all the information you can get from that particular chart. And you can see the entry models are not too bulky. Just look for a sweeping liquidity. Just have a liquidity to push the trade to another point of liquidity. That's how you get your entry, guys. So you see on the 15 minutes, it's more like price is trying to fill up an imbalance. So while you're on a trade, you actually analyze the trade. Yes, in this 15 minutes, see, price is trying to fill up this imbalance, but it depends on the move. Now, if price should trade into this imbalance and close with this candlestick body inside this imbalance, then I know that price has changed structure, something like that. So that's just it. I understand the market structures very well. I know how to, read the market. So that is one of my advantage here. So that will be all. And this is what this trade looks like on the MetaTrader 5. So this is what this trade looks like. I'm close to take profit here, but I don't know, Sha. I'm still hoping that we get to take profit. So just in case you want to DM me for any private mentorship classes or coaching, coaching. So I have my number on this video, and I'll be bringing it out time without numbers here. So my numbers will be around here in the description of the video. I also chip in the numbers during the video session. So you just watch. You can also DM me. It's just a little price and attention you have to pay. A little price and attention. Then I can maybe teach you ICT and make you a profitable trader. And profitable trader is not all about the strategy. You should know that. So that is it. It's better to have a good strategy and a good mindset as a beginner than trying to test all the strategies before coming in to get your main idea. So that'll be all on this video. Thank you for watching, and if you're a new viewer, do well to subscribe and follow for more information here for ICT updates. Thank you. All right, guys, we are almost at the end of this trade, and I was actually looking at this level here to see price coming to this fair value gap, but we did not. So I broke even after the push, and yes, we are TP. Look at the daily time frame. I'm at my limit. Sorry, I've gotten to my limit already, guys. Maybe this trade might want to push, but I think I'm satisfied at this level here. So let me show you what this trade looks like on the trading view. Alright, guys, so this is what this price actually looks like here. This is one of a good trade and like a pure delivery in price action. So this whole trade, I liked it because as a day trader, there's one thing you always like to see: you out of the 24 hours of a day, in less than 6 hours or in less than 10 hours, you've actually gotten to your target. And within these hours now, when you are unactive, like you just say, I took this trade early this morning or yesterday night around 10 p.m. So I almost got stopped out because of the spread when the market closed around here. I was very close of hitting SL around here because the spread was actually large on my Xness here, so it's almost dropping out here. So imagine waking up to see your trade has gone up to 30%, and just within the time frame you're almost at take profit. So I enjoy the whole should I call it the ease in price action. You know, when price action plays out so quick and very simple for you to analyze, just like you see everything played out completely, is very very should I call it interesting. Yeah. So guys, that will be all for this trade entry. Thank you for watching to the very end, and do well to subscribe, like, share the videos to your friends, recommend people to my channel, please guys. Let's hit 250 subscribers by the end of this week. Yeah, thank you. Right, guys, few moments after hitting take profit, guys, or after closing the trade manually because take profit was not going to come. Did you see what happened? This is one good thing about ICT strategy, not just giving you a nice entry but a good exit point just after the alignment on the daily time frame, just like I anticipated. You know, did you see how price played out, guys? So this is everything you need in this strategy. You have everything here: the confirmation, the exit. This is what gives you a complete setup, guys. So I don't really need to talk too much. Just in case you want to learn how to trade this concept with precision like this, you can just DM me on my WhatsApp number and we can talk business. Thank you for watching to the end. Share this concept among your friends. Share this video. I talked about many things in this video, so do well to share and like, and also subscribe to the channel. Let's hit 250 subscribers by the end of this week, guys. Thank you.